All right, welcome everyone. Um, Good afternoon, good evening, or good morning, depending on where you're joining us from, and welcome to the November edition of Mailbag, brought to you by the iFlip YouTube channel. I am your host, Aaron Yoon, and of course, joining me is none other than our Director of Sales, Lee Gearhart. Welcome, Lee.
Hey, Aaron. Hey, guys. Thanks for
Good.
joining this afternoon/night, where I assume most people are.
Absolutely. I mean, as expected, this is this we might have a fewer a fewer people on this show because it is airing at a new time, and not maybe not everybody got the notification that we moved everything up an hour because of daylight saving. So hopefully you're still able to tune in live, but if you're not, there's always the replay, and we'll answer your questions on if you leave a comment or anything. If you're unfamiliar with the format of the show, this is a Q&A type of show. We encourage live interaction, so jump down in the chat, say hi, and submit any questions you have to us. Lee and I will do our best to answer every single one of them as you guys trickle in, and yeah, seeing more and more people come on in. Great. So throw your comments in there. This is an interactive dialogue. Okay. Now, if you're already an iFlip member and you've been with us a while, you know that there's been a lot of change. 2023 has been the year of change at iFlip, and with that, we're getting a lot of there's just a lot of moving pieces. So we'll do our best to keep our answers succinct and the conversation moving along. But that's why we open this up to you, right? This is a forum for you to ask anything um, regarding anything, really, anything related to iFlip. Okay, so
You already have a question, too.
we can start off with that if you'd like. Mark Morris, thank you for participating early. Let's bring up his question. Okay. Mark asks, how is the Start Engine campaign going? Lee, why don't you take this one to start off?
Yeah, it's been good. Really good, actually. Last I checked, we'd raised just over 250,000 or so. So pretty good. I know there was a max on how much we were trying to raise. I think it was 1 million, or maybe a little bit more than that, but it's great. And that's not to say that it's a failure by any means if we don't hit the max. But it's been really exciting to see. Actually, let me look it up real quick, because it tells you how many people have invested. I want to say it's like 230 or 250 or something like that. So, and I assume a lot of those are new people that had never heard of us before, which is awesome.
Great. Yeah. No, I love the I love the question, Mark. For those of you that don't know what Mark is referring to, Start Engine is a crowdfunding platform similar to like Indiegogo or Kickstarter. Those companies are more known for crowdfunding for like a startup for like physical products. I know that I participated in an Indiegogo for a new way to like brew coffee, and I recently got that. So it's very similar crowdfunding for startups to raise capital. Our target was about a like $1 million raise through the end of the year. The campaign is still going. If you want to participate, I do believe I have a QR code for this that I will show right now for anybody that wants to participate. The QR code is right above Lee's head. Right above Lee's head. So if you're watching on a phone, you might not be able to scan it because you're watching on your phone. But if you're watching on desktop, scan that QR code. It'll bring you to that landing page for the Start Engine campaign, and you'll get to see. I think right now it says we've raised around $250,000, and spread out among 230 investors. So we're averaging a little over $1,000 per investor, but the minimum is only $500. So the average investor is more than doubling the minimum. That's really cool to see. And we're I don't know when we're closing. I'm not in charge of that. But I do know that we do plan on leaving this open. We're aiming for like 1 million through at least through the end of the year. The target that we knew that we wanted to hit was I don't remember exactly how many hours it was since the launch, but we needed to hit a certain amount in like 24 or 72 hours or something like that. And if we hit that, then Start Engine would promote us uh, more enthusiastically, like more they would promote us more on their front page, email about us, and all that kind of stuff. They would give us a boost.
Yeah.
Knock that out of the park.
Yeah. It was
We
like the first or second day. I was gonna say, and why Aaron said what he did was, there were time-based incentives, basically. Like the earlier you invested, the more shares you got in bonus shares. And gosh, we were basically, after 2 or 3 days, we were on their front pages, like, what was it? Companies with the most momentum, or however they phrased it. But it was really cool to see our name up there, and it like you've already said, it's been great. The only thing I was going to add, you put the QR code up there. You also talked about how if someone's watching on their phone, it's kind of hard to scan. I also put
Yeah.
the link in the chat, so you can just click on that if you're on your phone or something that can't take a picture of that QR code.
There you go. There you go. Teamwork there. Okay, so click the link in the chat below. Scan the QR code that's right above Lee's head over there. And check out our Start Engine campaign. If you've invested and you like what we're doing even more, no rule that says you can't invest a little more. And if you've never done a crowdfunding thing before, now's a great time to not only get started on and contribute and own a piece of iFlip, own a little bit of an equity stake in iFlip, but also subscribe to this YouTube channel and turn the notifications on, because we have a lot of YouTube shorts with Randy and Kelly explaining the basics of crowdfunding, the pros and the cons. And we're very objective about it. We don't pitch the Start Engine iFlip campaign at the end of it. It was just an educational thing about crowdfunding. So check out our shorts, because that's a great place to get educated as well. All right. Yes. So Mark, thank you for the question to get the ball rolling over here. Sounds like a great result. Yes, we're very happy. We crushed the initial goal, and we're looking forward to hitting our next goal. Now we do have some other questions coming in from. Okay, we have a request for a fee breakdown here. Our next question comes from Jennifer Lunt. Thanks for the question, Jennifer. Can you explain the breakdown? For example, the monthly fee is $17 per month for a $25,000 investment. I'm not sure what that means. Lee, again, I'm gonna kick this over to you. If you could explain our fee structure, which is kind of unique, right? It's a little different than
Very.
how most investment apps and firms would charge a different kind of fee structure. Ours is very unique. So break that down for us.
Yeah, I was gonna share screen. There we go. Let me just turn it on. All right. Hopefully, I think you guys can see this. It looks good on your end, Aaron.
Yes, it does.
Cool. It's a little hard for me to see just because my face is in the way, but I just wanted to bring this up, and hopefully it's big enough that you guys can see. Jennifer, what you're referring to right here in the $17 a month option. So it says Smartfolio investment up to 25,000. So just like Aaron said, we're unique in the way that we charge. We charge a software fee or a monthly subscription, which is totally different than financial services company, which charges something called AUM. AUM is assets under management. So say, I'm just going to keep it simple. Say you get charged 1% somewhere else. So if you have $1,000, you get charged 1% of that. If you have $1 million, you get charged 1% of that. Ours, I mean, you can do some math and make it into a percentage, but basically the gist of this is, let's start at the bottom. So, oops, I might have done something wrong. Sorry, Aaron. Can you give me, there we go. Sorry about that, guys. So I was going to start with a base on the left. So the $7 a month option is up to $10,000. So if you invest 5,000, 7,000, 8,000, whatever that amount is, as long as it's under 10,000, you're charged $7 a month. So say you start there, which a lot of people do, then you really like the platform and you decide to add more money. So maybe you put another 10,000 in and now your balance is 20,000. So nothing really changes. You just bump up to this tier and now you're charged $17 a month. So it's a very fluid thing. Like we have people all the time moving more money in and taking money out, especially in the self-directed IRA world. And we're able to be agile with you guys so that really you're always getting a good deal and you're never overcharged, I guess.
So, all right. So I couldn't agree more, Lee. And my comments on the fee structure is that you've probably seen this before. If you watch any kind of personal finance or investing YouTube channel at all, or if you follow any kind of social media influencer on Instagram or LinkedIn or wherever, you've probably seen the chart where your investment growth will go up and to the right, but so will your fees. It'll go up and to the right as well. It will scale up exponentially, as does your investment. Now, with a subscription fee, it's flat. In other words, if you have it, you really start to see it when you have a larger account, because you didn't see it on Lee's slide there because it's not as common, but we do have a lot of higher net worth individuals who are really attracted to the fact that we have trust accounts, entity accounts, corporate accounts available. The other apps, the other free apps out there, like I won't name names, but you know who they are. They don't have those types of advanced level accounts available because, well, it's just a lot more paperwork to deal with them, and they don't attract that kind of clientele. We attract a lot of sophisticated investors because we have AI to do all of the buying and selling for you. And what is even more attractive to them is they love it when they have like $1 million account, and with a traditional financial advisor, a 1% fee, which I haven't even heard of anyone that cheap these days. But let's pretend it's a 1% fee. That's a $10,000 fee up front. Like the advisor will pocket $10,000 first, and then start investing $999,000, whatever, right? $990,000 for you on your behalf. Okay. Whereas with iFlip, spoiler alert, Lee, what's the fee for $1 million account?
$147 a month. So anything over 100,000, doesn't matter how big it gets to.
Right. Whether it's $1 million, 2 million, 3 million, it's going to be $147, or if you go yearly, $1,470 per year, right? That's like over an $8,000, $9,000 savings just on fees alone, and it never scales up like crazy, right? So that's where a lot of higher net worth individuals move over their trusts, their entity accounts, their corporate accounts, all these advanced level, sophisticated level accounts over to us, because it's just a killer savings. Not only are you protected with AI getting you out of the market early, but you're saving a crap ton of money, pardon my language, just from the fees that don't scale. Okay, so hopefully that explains, that answers your question, Jennifer. If you have any other follow-up question, please let us know. And we have a very active chat today. I always love to see that. Resolving system issues when placing limit orders, have them stay for a few days. Okay. Francisco, if I'm understanding this question correctly, you would like for limit orders to be able to stay past the day, right? So right now, if you're a trader, I know some of us aren't traders here, but some of us are. So I'm going to use a little bit of trading language here. Most trading apps, if you place a limit order, you have an option for a GTC order, good to cancel order, right? It's going to stay there until you get rid of it. I think that's what you're asking for. And just correct me if I'm right or wrong there. The thing is, like, that would be nice to have. Also, we're more of an AI investing app, and for the manual trading, it's just we really just focus on just buy and hold. And if you want the limit order to be there, we'll have to work on it, right? We'll have to. I know that this is a common feature in other trading apps, but right now we don't have it because it's not our primary focus, right? We're more of a done for you AI investing service. Okay. Hopefully that clears
And
that up.
for anyone else who might be wondering, those limit orders cancel at the end of the day. So they're, they, you basically, I think we probably said this before, but we don't want someone to forget about their limit order and then months later someone or something gets bought, they totally forgot about it. So it's just not our typical clientele that we attract. Doesn't mean that it's right or wrong. It's just that we're just slightly different than other places and why we're around.
Yeah, exactly. But great question, and great. It's a great idea for a feature, and I know it's a really common feature. So we'll let you know when there's when that's available. Um, and then to continue, Francisco asks, if you contribute to iFlip, will you receive legal documents? Now, I think you are referring to the Start Engine campaign. Will you receive legal documents for that? Lee, are you aware
Yeah.
of the procedure here?
That's all, and it's all done online when you make your investment. I think we said it before, but if we didn't, the minimum's 500, like Aaron had said before. The average so far, I think people have put a little bit more than 1,000 in. But once everything goes through, yeah, the Start Engine, short answer is Start Engine gives you everything that you need. They'll have all the documentation and all that.
Yep. All of that is going to come from Start Engine. It is not iFlip and Start Engine are different companies. So just to be clear, like, you're not. I guess it's confusing because iFlip is also an investment company, but you're investing in the company iFlip via a crowdfunding avenue that is provided to you legally by Start Engine. So that's different than investing in the stock market via the iFlip as the vehicle to buy and sell stocks for you. It's very different. So just to clarify the difference between Start Engine and iFlip. Okay. And okay, continuing on from the chat here. Rogelio Achon, I hope I'm saying that correctly. I hate when I butcher people's names by mistake, but if I did, apologies. The question is, can you give a general overview of the financial instrument classes available for investment in the platform? Lee, I feel like this is right up your alley.
Yeah, and I hope I'm understanding the question correctly, as we always say. But if you're asking, like, kind of what the AI manages for people or what we invest into, it's individual stocks and ETFs. Not to spoil a question that we got that we were going to answer tonight, but there is a new portfolio or smartfolio that has a couple. They're technically probably stocks, but they're really like a money market ETF where there's an opportunity for your money to grow pretty much risk free. So, but our bread and butter is individual stocks, and then sometimes you'll see an ETF like the SPY or something like that in there as well.
Yeah, I mean, thanks for the question, Rogelio. We focus on ETFs, but really what we mean by the ETFs is the S&P 500. We don't. I know there's a lot of different kinds of ETFs out there. There's sector-based ETFs. There's leveraged ETFs. There's reverse or inverse ETFs. There's a lot of different kinds of ETFs. You won't find those on iFlip because the objective of iFlip really is to really track the S&P for the most part, but give ourselves a little bit of an edge using other equities and kind of diversifying opportunistic investments. What does that mean? I'll give you a couple of examples. For the most part, our bread and butter is going to be like in any of our core portfolios. Most of it is going to be trading the S&P, buying and selling, essentially timing it. But you'll also see other stocks that are sprinkled in it, and the allocation is usually 50% or higher on the S&P, and then the other 50% is split up amongst like anywhere from 2 to 10 different stocks. Okay. Now, that's because that allocation is trying to gain a little bit of an edge, right? Because we all want to beat the S&P, and iFlip has been beating the S&P consistently over the span of the last 7 years that we've existed. We're way ahead of the S&P, right? Versus a buy and hold, as opposed to using the iFlip AI. Now, how do we achieve that? Well, we achieve it by investing in things like oil companies, for example. They took a beating in COVID, so they were undervalued, but it's not because they were bad companies. They were just undervalued because of a pandemic. So there was a smartfolio specifically created to capitalize on the inevitable bounce back of all of the oil companies in the energy sector. Did you do it by, some people could do it by buying an energy ETF. There's if you unpack an energy ETF, there's too many things in there that's like filler stocks that aren't really that great. Like, think of it like if you unpack the ingredients of like something simple that you buy off the shelf in the grocery store, the more ingredients there are, the more likely that there's a lot of junk in it, especially if you can't even pronounce the ingredients, right? But if there's only like 2 ingredients and it's like water and I don't know, apples or something, right? Then you know, like, okay, this is very, very pure. So that's the kind of attitude and philosophy we have at iFlip. We don't want as many stocks as possible, because that's actually that the diversification, averting risk or whatever, is a myth. That doesn't actually work. We like to instead have a handful of good stocks in red oil. That's the ones that that have a high chance for appreciation and give good dividends. Just have a handful of those, throw those in there. How do we arrive at the decision for those? That's a combination of Kelly's knowledge of the market, his expertise, and an AI that kind of runs through all of the analytics of all the fundamentals of all the different stocks. It's a combination of that, simply put. Okay. Okay, so follow up there. How about bonds? How about cryptocurrency? Okay. This is the cryptocurrency is kind of a loaded question. If you followed us for any period of time, we tried to bring crypto onto the platform, but we couldn't bring it because of the a legal issue between our clearing broker and the crypto exchange liquidity providers. They just couldn't work it out. But we have tested our AI on crypto, and it works phenomenal. Just like it does for the S&P. I guess the equivalent of that would be like Bitcoin in the crypto market, and it works great on Bitcoin. When we're able to bring it to you legally, we will announce it, and it'll be a big deal. But in 2023, like I said before, it's been a year of change, and we've had other changes that kind of overtook it because we weren't able to work out the legal issues with crypto. Bonds, I feel like we kind of have a version of bonds, but it's a little bit better than bonds. So I think that question is a really good segue into into one of our other questions.
Well, and I think if I know where you're going, there is the TLT in the conservative portfolio that basically mirrors the performance of bonds, and it pays a dividend as well. So that's more of Kelly's rabbit hole to go down rather than mine. But there is at least one portfolio that does have exposure to things like bonds.
Yeah, right. Exactly. So we do. So what's the advantage of a bond? A bond is like a guaranteed fixed income product, right? And we understand the appeal of that, but there are ways to do that without the limitations of having to hold a bond until it matures. So we do, and we have to play inside of like, you know, the stock market. I'm not so sure. Our clearing broker doesn't support like the CUSIPs of bonds, I don't believe. So we have to achieve a similar kind of effect of investing in a fixed income product that has a guaranteed return, but we have to find that inside of the stock market. And luckily, this year we did. So let's just bring this question up here. What is the new money market smartfolio? Can you explain? So Lee, I'm going to ask you to kick this one off, and then we'll move into trivia.
Yeah. And I think Kelly announced it somewhat indirectly on the AI Circle last week. But we do, and that was, I think, the day that it actually came out. So the new smartfolio is called Money Market. It has 70% of the money going into something called USFR, and then the other 30% is in something called NEAR. Basically, what they are is they're pretty much money market ETFs. If you look at a chart of them, it looks pretty crazy. There's a technical term, I forget what it's exactly called, as to how the chart would look, but basically the stock is going to stay within a few cents of its price pretty much at all times. When it goes down, it's because it just paid a dividend, and then it'll go up until it pays its next dividend. So and actually, since I wrote the trivia question today, I'm not going to give away how often it pays a dividend. But it's a way to effectively get money working for you and making more than you could at a bank, getting 0.1% interest or something like that. But you also have the liquidity that if you want to pivot and move out of that stuff and get back into the more traditional stocks, then you can absolutely do so, and your money's not tied up.
Yeah, and there are other products out there. I think we got a question a few months ago about like how our AI had sold off the S&P and was just sitting in cash, and so people, and at the time it was like the apex of all of the different banks advertising CDs, right? It's like the highest CD rate we had ever seen, 5%. It's like something crazy like that. And they're like, well, 5% sounds pretty good. It's the best it's ever been. And so we got some questions about, what do you think about CDs? And our the thing that we wanted to emphasize is that CDs are great in the sense that it's the highest return ever, or in recent history. But there's a drawback. If you need the money earlier than the term, like if it's a 9-month term or a 12-month term, if you need it sooner than that, you have to pay a penalty. So your money is effectively locked up. And we don't like, I mean, we're all about empowering people to preserve, grow, and protect their wealth. We're not in the business of locking people's money up. That's banks do that. We don't do that. We want to give you the best option to grow your wealth, but also minimize against losses. And to invest in this ETF was a little bit less of a return, right? And it's designed not to grow, right? It's designed to just kind of stay within a very, very tight range, in terms of the price of the symbol, but it gives you that bond-like, CD-like payment in the form of a dividend, right? So over a span of a year or more, it is almost like you had the guaranteed return that makes CDs and money markets and all those types of things and bonds very, very attractive, but none of the drawbacks of like paying penalties if you needed the money sooner. So that's well worth the price. And I think that is a great segue into our trivia for the night, because our trivia is, if I can find it, our trivia question for this evening is, how often does the USFR pay a dividend? Of course, USFR is one of the symbols in the money market smartfolio that Lee just explained. And the way it gives you this, the returns, as we just said, is it gives you dividends. How often do they give it to you, though? I don't know. This is a great question because it's about a new smartfolio that just came out. So we want you to check it out. But what do you win if you get the question right? If you're selected as our winner, the prize for the evening is a $25 Amazon gift card. Now, let's be honest, holiday season's coming up. I'm sure you could use it. 25 bucks on Amazon might as well be cash, right? But how do you receive the prize? It's not enough that you just get the answer right. You also have to qualify. How do you qualify? Well, you have to show us that you're invested in at least one smartfolio. The way you do that is you email us a screenshot or your account number to mailbag@iflipinvest.com. Now, I don't see any answers here. I think we may have stumped the audience here. Go ahead and type in the answers, folks. If you've been like listening and consuming our show as like a podcast or anything like that, kind of passively, now's the time to stop what you're doing for a moment. Answer the question: how often does the USFR pay out dividends? And the winner of the person who gets it correct, right, first is going to win a $25 Amazon gift card. And once again, in order to qualify for this prize, you need to send a picture of your account or your account number or a screenshot of the smartfolio that you're invested in. Send it on over to mailbag@iflipinvest.com, or you can also text us if you prefer texting us. Let's see. Our text number is 480-418 and 0575. It's on your screen. So it's up to you. We have a couple of answers here. We quarterly, 4 times. I assume 4 times is the same thing as quarterly. You meant 4 times a year. And Lee, what do you say to that, Lee?
I actually, now that I'm seeing the answers, it's almost a trick question. It's really not, but if you're familiar at all with dividend stocks, the most common way that they pay them out is actually quarterly. So these are actually either people have been paying attention or they just know a lot about dividend stocks, that's what's common. I'm not going to give you the answer yet. I'll give you a couple, maybe more minutes, but I'll tell you it's not quarterly. This is a different one.
It's not quarterly. Isn't that crazy? I mean, this is the answer that we were kind of expecting. This is why this is a great question. I really like this question. Lee came up with it. Kudos to Lee for coming up with a great question that triggers a really neat discussion. It is not quarterly, even though that's the most common. So what is it? So you might need to consult the Google Lifeline here for this. But the first one to get the right answer, we don't have it. Still up for grabs. Your $25 shopping spree on Amazon is still within reach. So let's get the answers in here. So in the meantime, let me bring this out here. Let's hide that. And we did get another question that it's a little bit more of a housekeeping question about excuse me. I think I skipped it. Yeah, there it is. Okay, it's more of a housekeeping question about the state of iFlip, and I'm going to move this QR code out of the way because I think hide. Okay. I've already chosen to migrate to optionality, but I still see the banner in the app. What does this mean? So just real quick, we are currently in the process of migrating, introducing brokers, which means you won't see any changes that really affect you. Like it's all behind the scenes back end changes, but we do need you to acknowledge that you're agreeing to that change. So we've done a campaign to email you, and we've also done campaigns inside of the app to notify you. Unfortunately, I'm going to admit this right now. They're not synced. So if you already engage, if you already responded in the email, then you can just ignore or dismiss the banner in the app, because the app doesn't know you did it via email. It should, I agree, but right now it doesn't, because it was we just launched two things kind of separately with separate teams, and they didn't talk to each other. I mean, the teams talk to each other. The apps and the protocols weren't able to talk to each other technically.
Well,
Okay.
and we sent out the emails a little bit before the notifications at the top of your platform were even ready yet. So a lot of people that have asked this question, it's because they already handled it via email, and then they're wondering why they're getting it on their either on their phone or on their computer.
Exactly.
So, I mean, you can double check. You can always reach out to us if you don't remember what you selected, or if you even did. We'd be happy to help. But yeah, sorry.
Yeah, I mean, we understand, it's something that sounds simple, but at the time we were designing two things separately, and they kind of went different paths, but we didn't have time to sync them up. Sorry. So if you already did one or the other, please just let us know, and just be like, can you turn this off for me, and the other one, and we'll take care of it. Okay. We got a bunch of more answers in, and I do see the correct answer among this list. But here are some fun ones. I like this one, right? This one's my favorite. Daily?
I wish, Mario.
Daily dividends. That'd be awesome. And then of course we have the opposite of that, the other end of the spectrum, yearly. That does happen, I think, sometimes as well. Semi-annually, I guess that would be what, every 6 months. But those are not the answer. The answer is, of course, Lee,
monthly,
which means that our winner for tonight is Susan Lewis with the answer of monthly. Yes, so this is, I don't really know how bonds pay out, how often bonds pay out, or CDs pay out. I never really owned one before, but I bet you it's less frequent than monthly, right? So I think this is a far better way to achieve the similar effect, and stay liquid and get paid more frequently than holding like a bond or certain kinds of CDs.
And your money compounds more frequently too because of that.
Mm-hmm.
So, if it pays if you're getting 5% per year, broken out, monthly versus quarterly, I haven't done the math to see what the exact difference is, but I know there is a significant difference.
Well, that's how credit cards make their money, right?
Yep.
That's how they compound. And yes, it does compound more frequently. I didn't even think of that part. Thank you, Lee. Yay, Susan, congratulations. It's, just in time for the holidays. You do need to once again qualify, and send us a screenshot of your account to either mailbag@iflipinvest.com on your screen there, or text us on the number on the bottom of your screen. Okay. I think that about does it for this episode of the Mailbag. Thank you so much for your engagement today. It's always lovely to have this kind of dialogue going. Another piece of housekeeping: next week, obviously, is Thanksgiving week for everybody in America that celebrates that. So we are going to push back. The AI Circle will not be next week. It will be the week after, on November 29th. So make sure we will send out an email, of course, and notify everybody. AI Circle is in 2 weeks on November 29th. Until then, we're going to sign off and say goodnight, everybody. Happy Thanksgiving. Have a happy holiday. We'll see you in 2 weeks.
See you guys.